Welcome to a new market cap episode. Market caps where funds and firms provide their insight on their activities, sector, and the markets at large to you, our audience of institutional investors and traders, as well as industry professionals. The content presented on Market Cap is intended solely for informational purposes. The views expressed by hosts and guests are their own and do not necessarily represent those of Alea Research, its affiliates, or any organization with which participants are associated. Nothing discussed should be construed as financial, legal, or investment advice. Viewers are encouraged to conduct their own analysis and consult professional advisors before making investment decisions. I'm your host and moderator, Stefano, Director Institutional Services at Alea Research. With me, I have Mariano, our analyst specialized in valuation and market reports. And we're joined by Tim, venture partner at Mirana Ventures. Tim, welcome to the show. So good to have you with us.
Thanks for having me.
Yeah, for sure. Can you tell us a little bit about your background? We're going to talk a lot about DATs today. Um, you're becoming quite the expert online, and even have a moniker, the Dot Father. At this point, it seems to be sticking. But yeah, on a more serious note, please tell us a little bit about your personal and professional background.
So grew up in the States, spent about a decade and a half between Wall Street and Silicon Valley, some number of years in Asia as well, in the tech space. And then most recently was a partner at a multi-billion dollar global investment fund backed by sovereigns in the Middle East. We were doing late stage consumer and fintech investments, anyone from Gorillas, Klarna, Nubank, some of those more notable names globally. And then at the end of last year, early this year, joined up with the broader Mantle Mirana team to really build out this ecosystem beyond the L2 that is Mantle and helping turbocharge that vision into what I generally term as trying to onboard the next billion users. So taking a more super app approach to our products as opposed to a more horizontal open source software approach.
Okay, that makes sense. And DATs, how do they fit into this? Is this one of the ways maybe that you think we can onboard those new users? Um, yeah, let's get into DATs a little bit. How do they fit in? What and yeah, maybe start from the very basics, right? For people new to the concept, what are DATs actually at a very fundamental basis?
So let me take a step back. The way you have to think about any technological adoption is it's generally on an S curve. And so I believe that the very initial innings, let's say 15%, was taken by the centralized exchanges and folks going on chain. So the early adopters who were tech savvy enough to take that risk. Now, if you want to onboard that middle, where that inflection point is, you have to build a product that looks like a duck, walks like a duck, talks like a duck, something that they are familiar with, right? And so equities, at least in the US, the stock market is massive. A lot of folks have trading accounts. They understand it, right? You try to pitch them Bitcoin, I don't know. You try to pick them Doge, I don't know. Oh, but it's MicroStrategy. It's wrapped in an equity wrapper. Oh, I just one click buy on my Charles Schwab account or Ameritrade or Fidelity. It becomes easier, right? And
Yes.
that goes back to the point on distribution. In 2017, we had ICOs distribution as a ways to get tokens in people's hands, right? Then we iterated on that to airdrops, points farming, what have you. I think DATs is that next iteration of how of a distribution tool to onboard the next cohort of users who are not on chain, but maybe they are on Robinhood, Interactive Brokers, etc. So with that pretext, right, how we think about DATs, if you are a normie, you can think of it as, a digital asset treasury is nothing more than a company that holds this token on its balance sheet, and we should value it based on the net asset value. So it's just a wrapper, so to speak. When you talk to crypto people, it's just a wrapped whatever, and your new listing venue instead of, let's say, Binance or Bybit, it's the Nasdaq, right? That's essentially how you should think about it. It's a wrapped what for whatever the underlying token is.
Okay, that makes a lot of sense. And I like that introduction about the adoption and the S curve. That makes a lot of sense. Um, like you said, it's a wrapper. We understand that like some of these DATs are actually former, maybe not nice way to put it, zombie companies who kind of pivoted to like, oh, hey, you know what? Actually, this is a viable strategy for us. Also, hearing more things about SPACs. Are there maybe also DATs that are being spinned up as companies from the ground up, so not former zombie companies? Like, what does that spectrum look like, and does that have
Yeah.
implications?
Yeah. Great question. So, taking it from the very beginning, right? I think MicroStrategy definitively created the playbook, and
Yeah.
then you had a good copycat, well, very successful in their own right, MetaPlanet doing this playbook out in Japan. And that spawned the ethos of DATs. Okay, well, what if we did more Bitcoin treasuries? What if we did treasuries for Ethereum, Solana, and give whatever altcoin that you want, right? And I think what you have to understand is what you pointed out, there are different routes to market, right? What is most important here is the expediency, and there's a trade-off. You either have a very clean shell or you get to market faster. So first was through an RTO, and that was done by the Nakamoto deal with Kindly. And while that was the first one of its kind of creating a DAT, folks soon realized, oh, this is actually quite time consuming because the capital raise cannot be deployed to buy the underlying asset anytime soon. There was a couple months waiting process, right? And so people then quickly found within the legal confines of the capital markets to say, how do we get to market faster? Oh, why don't we find a zombie co or an opco, say sub $10 million market cap, and that looks clean enough, buy them out, juice it with insert asset token, and therefore that becomes a DAT, right? The market should then value it based on that story as opposed to whatever the opco was before. Maybe it was a vape company, maybe it was a biotech, maybe it was a random fintech company. So that's a second route. And that what we've seen is the most expedient way to get to market. The third route is SPACs. And what we've seen, most SPACs have been done with Bitcoin because you can raise large enough size. Usually you want to be $1 billion and above to make the economics work for all parties involved. Now, there are some SPACs that have been done for alts. I think ETHZilla should be one, and there was an Etheno one. Those were smaller than $1 billion. But the advantage for them is, hey, look, by going this SPAC route, you're listing a shell that ultimately is clean. There was no historical operating entity that might have some contingent liabilities that will come back to bite you. But with the SPAC, your go to market might be 5 to 6 months. So really the trade-off between people looking to do a DAT now is, do I want the cleanest shell possible? If so, you got to raise enough to make it worth it and go through a SPAC route. Or speed to market is important. I will, I will reap what I sow with the company that I buy, and then before they go buy one of these zombie shells.
Okay, that makes sense. What's the benefit of it being a cleaner shell, as you put it? Or another way to ask it, what are the trade-offs of it not being so clean?
Yeah, so oftentimes with these other shells, they are sub 10 million and they're on the chopping block in the market for a reason, right? They haven't been performing so well. Or as a friend says, they've had some pretty bad dates, right? And so what happens is they have a lot of overhang. Maybe previously in the last couple of months, they had been recapitalized by not so friendly predatory financial firms, and you have a lot of warrant overhangs, convert overhang, what have you, right? And so you have to pick the one that you're most comfortable um, getting in together with to actually launch this strategy, because the strategy is already legally circumventing a lot of so far it is legal, but it's like pretty creative, right? And the last thing you want is another skeleton in the closet that somehow blows everything up.
Okay, right. That makes sense. That makes sense. So there are some risks, depending on the history of that company or that shell. That's understood. How does this compare to ETFs, which was also sort of presented as this playbook for mass adoption, bringing the institutions in? It
Mm-hmm.
seemed at first when the DATs came up, ETF flows were also slowing down a little bit. almost as if it's like the same capital flows that are choosing different routes into this market. What are your thoughts on this? How should we think of ETFs specifically compared to DATs? Um, yeah, maybe what are some misconceptions around this whole comparison in the first place?
So they're distinctly two very different products. I would
Okay.
think of ETF as in the more regulated, slow moving, larger liquidity. So by the time it checks all the box and is regulatorily kosher to launch, you have the smaller guys like a Rex Osprey pushing the envelope and taking risks on putting out new ETFs, whether they're staking ones or altcoins. But you have the guys like BlackRock and these large institutions waiting the wings when everything is clear. They just come in and build when it eats lower the expense management fees and eats everyone's lunch because they have the distribution power. So one thing to know about ETFs is a lot of the flow, I think even today, has been largely self-directed from savvy individuals or hedge funds doing the cash and carry trade where they were long ETF and short the futures on the CME and netting the spread. So I know a lot of hedge fund friends of mine who their funds maybe own low single digit percentages of these ETFs. So that accounted for a lot of the flow. Now, what is interesting is if you've ever been in a wealth management or one of these like RIA type conferences, which by the way is like a slugfest, but the number one thing when people go out there and talk about Bitcoin is they are still pitching to these RIAs that this is a generational opportunity. And when they ask how many people are selling or putting Bitcoin on their clients' portfolios, you maybe have two hands go up in a crowd of like 5,200. So we are still early in that sense. Why? Because ETFs also. So I launched a 40 Act product in my last life. It was like death by 1,000 cuts. It's very slow moving. It's very hard to even get a year's track record before you can be considered to list your ETF product with any of these like Fidelities, Ameritrades, Merrill Lynch's. And so if you haven't qualified yet, they can't sell your product. So that distribution pathway is just very long and your economics don't look that great. On the flip side, boom, come in these DATs, hitting the markets in less than 2 months' time. They are inherently more volatile, and retail loves to play momentum and volatility. And so all of a sudden, it's captured the zeitgeist of, crypto for stock equity traders, right? So I think that's why it makes DAT super attractive. And I strongly believe we're still in the first inning of DATs, as in today they're just accumulation vehicles, but in the future they can evolve on their business model to position themselves however they want to compete on other types of metrics. And who knows, maybe these will evolve to look very different 3 to 5 years from now.
That makes sense. You're already bringing up a point that Mariano wants to ask about as well, I think, which is the life cycle or where we are at in the stages of the proliferation that we're seeing right now of DATs, right? Mariano, you want to take over?
Yeah, it seems like we're on a different cycle. Last cycle we were trying to sell to ourselves that it was going to be the super cycle. Of course, it wasn't. It was the first cycle that we had DeFi. I would call it the first big liquidity cycle where you could use it as a empiric source of data to base any of your assumptions in crypto. Because the cycle prior to that was basically Bitcoin and a bunch of altcoins, which were extractive, right? This cycle now, which started with not started, but bottomed with the FTX implosion, is a whole different monster. There's BlackRock, there's Fidelity, there are all these new DATs. There's a lot of investment advisors selling crypto to any number of participants that haven't yet bought into the narrative and are slowly getting into it. My general idea is that this wasn't possible in the previous cycles. What's your framing on how it is possible this cycle? Was it due to ETFs or was it something else?
Trump administration.
I'm
Wow.
sorry.
I strongly believe it's the Trump administration. It's gotten people a bit more aggressive with going to market faster because they know that it's 4 years, right? And if America's open for business, let's push forward.
Yeah, the Trump administration basically, as of right now, hasn't fully done everything that we wanted to for the market, but it's slowly doing it. I think that we were hopeful for clarifications of what would be what by the SEC. The SEC yesterday actually gave a really big news on the ETFs that there might be able to launch they're softening the launch process, which is they're adopting like a generic listing standard for any Coinbase derivatives listed. That's also one of the things that I think may be competing with the DATs now, that ETFs are going to be more easily launched, which is a point you mentioned. Have you seen this new update coming from the SEC, and what's your position on it?
Yeah, twofold. One is it takes a long time for that to be implemented. And again, even if it is, it takes a long time to even set up and go to market with an ETF, much less have it be fully distributable to the wider audience, right? So I think, don't hold me to this, but I'm willing to bet that a lot of these alternative ETFs, when they come to market, they probably won't even see 50 million, much less 100 million of AUM. So I think it would be hard pressed to find people putting a lot of volume there. I think you have to think about the users you're targeting, right? If you're targeting the most advanced, are probably buy everything on chain. The retail traders want momentum, volatility. They will buy the DATs. ETFs are ETFs because they trade at 1 times MNAV. That is literally the goal, right? To keep at parity for tracking. So if you just want exposure, you have to say, okay, what warrants someone to want exposure to Doge, buying Doge on Coinbase when you have these easier apps, or even Robinhood, versus buying an ETF, right? I think ETF sounds good as a new avenue, but in terms of the actual new subset of users it opens up to is actually already accounted for. So in my opinion, the zeitgeist of which the administration's SEC is friendly towards crypto is nice, but most of the ETFs are launched mostly as a marketing stunt.
Yeah, I'm generally aligned with your opinion. I have a general idea as well that, likewise with ETH DATs, which were announced largely in June, they were front run by ETFs. So we might see flows that are non-directional, if you will, just more event driven, just to do the trade on these smaller ETFs before larger DATs launch. As you say, there are a lot coming to the market. So as a segue into this, yesterday as well, we had a major event, which was the Fed interest rate cut, a long time awaited event. You have a bucket which spills over into other buckets, which starts from the Fed rate cuts. This is a tweet you had earlier. Is this the start of something, or was it priced in? Can you break down how this buckets are going to spill over the others, and what does the Fed rate cut mean after all?
Yeah, it's interesting, right? I think a lot of folks, myself included, was expecting a market flush, as we've seen oftentimes that the market gets ahead of itself, and then it's a sell the news event. Maybe that has already happened and we've rebounded. Maybe it has yet to happen. I don't know. But I think in general, what it means is as rates come down, people go more out on the risk curve and go risk on, right? And if that capital going risk on is more TradFi, that's going to flow through products that exist that TradFi people can touch. And so you have your majors. And once the folks have allocated fully to majors, that creates a wealth effect from which those folks will then allocate to the category winners or emerging category winners, right? And so I think you just have to think about what are the flows from which the capital can move. And from those individuals, if they are much larger, if they're larger funds, they're going to be allocating a larger percentage to safer bets within crypto or the majors, right? And then less in those. And so in general, you're not going to see what you saw in 21, where a mass entry of retail that wants to speculate on chain via stimmy checks. We haven't seen that, right? And I don't know if we'll see it this cycle. Even if we do, everybody who's still around are now veterans. And so it's becoming a bit more PvP.
I'm generally aligned with that. That's there are a lot of questions of when this cycle is going to end. Is it the super cycle? But now that the Fed rate cut just happened, arguably we're just getting off to the races, right? It's been a long time since we had an easing, and crypto has basically lived its entire existence prior to this high interest rate environment in a low interest rate environment. So, and it has prospered during now it's going to be, I think, a matter of, are we going to back to prosper, or are we going to correlate to a macro or uncertainty event that's not on the radar? I think the more consensus and the more probable market continuation is to the upside, at least for a few more semesters or years.
Tim, you looked at a lot of different. So far, we've had this conversation at a pretty high general level. Of course, for your work, you've looked at lots of different of these vehicles. What are some that stand out to you? I know we got a few different flavors. We have the majors, we have the alts. I think last week or earlier this week, I heard the first one being announced for Fluid, an app. What are the different ones you see taken off? And what are maybe one or two individual ones that stand out to you that you would think are most interesting for whatever reason?
Yeah. So I would categorize it in 3 buckets, right? Either you're a Bitcoin treasury, or you are ETH and Sol, or you're an alt.
Okay.
So the Bitcoin ones are playing a very different game. I think they have the work cut out for them because MicroStrategy is number 1. It's going to be tough to compete. ETH and Sol are now fighting for who is that Sailor equivalent. And because these are one of these like liquidity begets liquidity type flywheels, I think you're going to end up getting number 1 player getting 60-70% market share, number 2 getting 20 to 30%, kind of a duopolistic, and then third place is the long tail of everybody else getting like the last 10%. So what I believe we'll see is on ETH, feels like Tom breakout. On Sol, feels like Kyle breakout. So I think that's where we'll see the pecking order. For ETH and Sol is interesting because they do have native staking that generates yield. And so for them, none of them are foundation backed, right? There's no official foundation that's backing them. Nobody's blessed to be the Sol winner. And none of them control enough of supply to really make a dent. I think ETH Bitminers, like their target's 5%. I don't know where they're now, maybe 2 to 3%. So they're playing a different game, right? Whereas the alts, you see someone like, give an example, the DJT deal with Kronos, the Crypto.com token, right? Supposedly spinning out a company to merge with the SPAC, is going to have like 20% of CERC out the gate. That's interesting, right?
Right.
What kind of market dynamics does that create back both on the DAT as well as back on the token on chain? And so I think the alternatives are playing a very different game. And I don't know if they know that because it's not necessarily.
Ooh. We lost Tim. So let's see if he rejoins. I'll give him a quick ping. No. Now I'm especially happy that we record these and release a higher quality edited version on YouTube after the show. So that's fortunate. Let's see. Mariano, maybe you want to share some of the graphs you were looking at, the one from Blockworks, maybe. That one was quite interesting. Oh, I guess you cannot share screen. I can share though. Yeah, what are we looking
This is
at?
largely impressive by the ETH sailors, which there are two, just like Solana. I think that complementing to Tim's point on Solana having now it's on sailors. It's I would say it's Kyle and Dan Moorhead, which is co-founder of Pantera Capital, which is also with a Billy plus DAT raise or to be deployed, which is more exciting. Hasn't fully deployed yet, which isn't reflected on this chart yet. In my understanding, it could be, but this just came out from Blockworks a day or two ago, which reflects the quarter by quarter DAT Treasury companies purchases. What we can understand from the last quarter being the third quarter of this year, quarter to date, it's not even finished. It's about 10 days out, so it's most 90% finished. Is that Ethereum has largely outperformed Bitcoin DATs. That can be attributed to several factors, such as Ethereum not having a sailor prior to the third quarter, which both came at the same time, notably Joe Lubin as well. And of course, Tom Lee, our Wall Street veteran, ex fund manager at JP Morgan, and very well connected. So there's hype as well, which is small on the chart there. Athena is yet to be. I think that it's yet to be inserted. It's not there. But what we see is impressively Ethereum largely outperforming. It goes to show that the outperformance of ETH on the chart and price is fundamentally backed by flows. There was a recent article as well by Sean Charbonneau, which is I think Tim is back. Do you hear Tim?
Tim is back. Yes.
Tim is back. I think we go. Tim, you're on. We got almost everything.
Sorry about that, Mike.
Yeah, no problem. We got almost everything up to the point where you were talking about how these new vehicles on the alt DATs, which you have an awesome article, very in depth on the matter, are largely going to be more impactful and therefore have their own intricacies, not just the majors. The alt DATs are the ones that we should be looking out for.
The alt DATs, if you think about it from their perspective, right? We are in a meta where it's all about revenues and using revenues to buy back tokens to improve value, right? Hype, pump. Well, instead of doing a buyback and burn, you can effectively throw that into a DAT, and not only that has the same effect of buyback and burn by removing the token out of circulation, you're actually monetizing it because you're selling equity against that wrapped token. So I think this is where it gets interesting for alts. If you have product market fit on chain, you might be able to get product market fit off chain on the Nasdaq or the NYSE. And if you're an alt, I think you should see DATs as a fundamental piece of your growth strategy and distribution strategy. So if you can structure it correctly, not shoot yourself in the foot, then I think you can do some pretty interesting work with the DAT in the future.
Do you think we're going to see foundations, or maybe we're already seeing foundations actively executing this strategy, or at least facilitating it through proxy parties, related allies, things of that nature?
Well, I think there are two types of alt DATs. One has been more officially backed by the foundation. Either the foundation invested directly, or they are buying tokens from the foundation after they raise. The Telegram one. On the other hand, you have ones where there isn't one officially blessed or backed DAT, and you have multiple ones. So Hype, for example, I think has two, but there was announced to be. The question is, for those, will liquidity be fragmented like L2s with L1s, or is that simply more shots on goal? I think we have yet to see how that play out.
All right. I'm trying to pause the upload to improve the connection here. We'll see if that picks up. Um, as
Sorry about that. I'm
far
gonna turn on my video if that's easier.
um, it should be fine at this point. I think you can leave the video. Let's try to keep the video on. I've nerfed the upload. So yeah. Okay, so that's clear. So we got the different type of flavors, and that creates different dynamics within the market because they could command a bigger share of the token, etc. As far as specific, um, very specific vehicles go, specific like individual DATs, are there any ones that you particularly, let's say, admire for their strategy, or that are doing something distinctly different, that are executing exceptionally well? Who stands out to you?
Yeah, it's a great question. I won't comment on who stands out that I prefer, but
Okay.
what's interesting is, right, Bitmine has done well because of Tom Lee is well in the mind share, right? And I think what a lot of these folks tend to miss is you can't just throw some guy with 20 years of track record on Wall Street onto one of these, nor you can't just take like a crypto KOL and throw them on one of these, right? Because your ultimate customer is someone who buys retail TradFi equities. And Tom Lee has had that reputation and pedigree and distribution via his time on fintech media in the traditional means, right? CNBC, Bloomberg. So he's built that trust. So I think you have to think about, if you're playing the ETH and Sol game, how do you differentiate? Do you try to yell louder than the other spokesperson? Do you try to differentiate on efficiency metrics? What is the market rewarding you, right? Right now, I think what we're at, where we are, what I call return on attention. So again, Tom Lee seems to be that pole position in ETH, Kalsamani maybe in Solana. And so the question is, what does everybody else do, right? Because because if you yell louder and have a better return on asset, ostensibly you can trade at a higher MNAV. How does everyone else compete? Everyone else seems like a commodity, right? Do you compete on other metrics? Well, you compete on, do you generate more revenue than the other guy? Are you more efficient at generating revenue? And I've talked a bit about this, but it looks like what we saw with the Bitcoin mining space, Marathon and Riot. And they accrued massive institutional flows, and they gave them massive advantages. Over time, as smaller guys came to market, they start competing on, well, it's not about how much Bitcoin we can produce on a daily basis, it's how efficient are we in doing that. Oh, it's about how cheap can we get our cost of power. And so there's maybe 3 or 4 other key metrics that came out that they were competing on, and through that they were building their own cults of retail traders, a decent cult, and same with Iris Energy. So I think that's what we'll see with the ETH and Solana DATs, that the other guys have to branch out, differentiate somehow.
Okay, that makes sense. So you're saying we're still kind of in, let's say, market discovery phase, where it needs to be figured out what are the key levers or buttons to push on, or levers is the right word, I suppose. One you mentioned is having a, you call it return on attention, having the right person at the helm. Um, let's shift gears a little bit to not the levers to just pull on, but also the risks here. Um, Mariano, I believe you had some questions about that.
Yeah, I've also always been curious about what would be the bear case for DATs. The bull and neutral cases are very clear to me. They're net going to generate at least some sort of demand, which a lot of crypto assets need to justify their market caps. And you can do a lot of fancy modeling based on those flows relative to how much those flows affect price and whatnot. That is net positive. What is the downside though? What's the other side of the if it ends up going, let's say MNAV compression doesn't end well, what would you say is the largest couple of, you can cite a couple of specific raises or accusations that have been in the market, like basically for selling, that could end up in blowups? And will it be as large as FTX if Sailor blows up? What's the odds of that?
Yeah, so I'll address that backwards. I don't think he's in any preeminent danger because his cost base is so low. And with the other DATs, you won't see a large liquidation event like you saw with FTX because these aren't levered vehicles. These guys aren't raising with debt. They're mostly raising with equity. And so think of it more like a clog drain, that if these things do go south, it'll just take a lot of time for them to work themselves through the system. Do they shut down? Do they unwind assets? Does another player come in and buy them? So I think that's what will be the downside. And as you point out, Mariano, I think the downside case is what happens when they trade below 1x MNAV. And we saw that with some of the ETH guys, right? And recently we saw two answers. One, you buy back shares. Two, you invest in a moonshot and count that towards your MNAV, which I call it now moonshot adjusted MNAV. And there's different ways you can support and defend your price, right? So I think we're starting to see people get creative, and only time will tell, right? If someone trades at 20% discount, 10% discount to your MNAV, it's fine. I think they can still operate. If you trade at, do you then become a forced seller of your token to buy back shares, right? Will the market appreciate that? I think it's still early to tell.
Yeah, that's a good answer. For comparison, though, Lido, which is the Lido's ST, which is the largest liquid staking token, depeg from ETH, which was mainly caused by a liquidity run on the bottom, FTX, everything else combined, and that didn't break the market. That didn't, basically cause too much trouble. So specifically, DATs don't have this sort of one-to-one redemption mechanism as ETFs, stable coins, liquid staking tokens do. So I've listened to Dylan Leclerc talking about Meta Planet's, extra strategies that they could play if they do end up in a negative compressed, negative, I mean like below one, and MNAV. How are these companies, what are the leverage they have? Is it seniorage where they can dilute shareholders? Are buybacks the best way? What is your position in like the most strategic, or what's the most used in your view that it's most effective?
Yeah, I think the larger you are, meaning if you're a BTC mainly, maybe you're ETH, probably not. The more active operate with those tools in their toolbox. The alts do not. But that's also why the alts are interesting, right? Because they are much more volatile. Market is okay with it. They won't punish you by selling more and create some kind of downward spiral effect.
Gotcha. Are you with us, Tim?
Yeah. Sorry, is my
Awesome.
internet cutting out again?
Yeah, just a bit. So does that, with that in mind, that there are the larger ones, or the, let's say, quote unquote blue chip and safe, as they have more liquidity and more leverage in terms of basically, or the attention that they do have, as a basically an offset, they can unroll easily. How is that on the short term opportunistic DATs? Let's say that there's new DAT coming for almost every new altcoin that has some sort of foundation that has budget, launches a DAT. How do these can separate from these major ones in the technical level for that unroll process? Is it just like the length period? Is it the how much leverage did you have on the system to unroll?
Are you asking, what do you mean by unroll? To unwind their treasury, or do you mean how do they differentiate?
Yeah, in terms of the largest, let's say strategy, SharpLink, now Solana, the Solana DATs, I assume those have different characteristics than the smallest, the newer DATs. Are there like significant technical differences which can characterize those as more risky?
I don't see that the larger one can probably structure the initial funding differently. For example, we've seen a lot of the pipe raises be common equity and maybe different types of warrants attached. And so you have to be cognizant of, okay, what are the strike price for those warrants? When did they kick in? Or, maybe you were able to attract investors by giving them a discount on entry, but nothing else. So I would say everyone has access to same tools, but maybe you have more leverage.
Yeah, that makes sense. And do you think that this is the real bridge? I think ETFs have started doing it, but does this close the gap between crypto, altcoins, and even the majors as well to access the market? From TradFi, there's
Yeah, I think that window is
okay,
closing.
yeah. I think the way that TradFi investors are looking at Bitcoin, ETH, and potentially altcoins are going to be changed based on these attention games that DATs are playing. Essentially, we can see how Tom Lee is easily selling ETH to TradFi. Do you think that's a major play that these alt DATs are going to address as well, trying to sell in a very easy manner of the the crypto industry businesses? I think that mostly the DATs that are alt DATs are some of them the biggest, largest ones are like Athena, Stablecoin X are businesses. So does that help bridge that gap in terms of traditional investors understanding the asset class?
The biggest problem for the alts will be education and awareness, right? Because are on brokerages, usually retail traders, maybe some funds. And so how do you yell crypto louder than Sailor was yelling Bitcoin? So like imagine your cousin or your grandma, and first she hears a Bitcoin. Oh, what's Ethereum? Oh, what's Hyperliquid? Oh, what's BNB? Like it's very hard to compete for that attention and try to educate them on that longer tail. And so that would be the largest obstacle a lot of these alternative DATs have to compete against.
Yeah, and that addresses that last tail end of cohort of investors that you mentioned that these new ETFs aren't going to be able to cover, right? These DATs will have very, explanatory 101, and you will basically attribute that explanation to the DAT. That's the way they're going to sell it. So essentially, that's how they're going to be able to capture that long tail as well. Yeah, I think that makes a ton of sense. Looking at the market ahead, which I think is very promising. These DATs have, broken records this quarter. It's the first quarter technically where we have considerable DAT availability, right? We have many ETH popping up, many Solanas, many Hyperliquids, alt DATs. Looking ahead though, what's this proliferation looking like of these highly specialized DATs? For example, what do you make of these new announcements? Are you bullish, bearish on the DATs doing well? And what about the altcoins that they're uh, building treasuries of?
It does feel like if you're the nth Bitcoin, nth Ethereum, nth Solana one, it's getting pretty crowded now, right? Unless
Yeah.
you are the largest Bitcoin one in choose another large capital market, right? You could be the de facto regional winner. But in the US, it's too crowded. As an alt, I think ones that are officially backed by the foundation have the most strength just because everyone's kind of aligned there. But again, your challenge is trying to tell the market what is hyperliquid.
Yeah.
Oh, it's like a better coin. How do you
Yeah, I'm not getting you, Tim, but I think you're saying the main challenge remains the educational part on these more long tail end DATs and assets, or DATs for these assets. So that point stands. Um, just to wrap it up, because I think it's pretty clear that you're long term bullish on DATs in general. What do you think might be some surprising outcomes that people are not yet expecting in the next 6 to 12 months?
It's a good question. Maybe we'll see some M&A and consolidation in the BTC, ETH, and Sol space, right? If you're a laggard and you are much smaller and you can't yell louder than a Tom Lee or Kausamani, and you end up trading at discount, does someone come in and buy you? Maybe,
Hmm.
right? It would be interesting to see how it would be interesting to see M&As happen and also how they happen, right? Because if you're down 20%, nobody's gonna come and buy you because maybe you'll be back up to parity within a month's time, right? It takes time to affect an M&A. So I think all these questions, we'll see. That's why I don't think there will be a catastrophic one-time liquidation event, but kind of like a slow grind, indigestion almost, as these things kind of work themselves through the system.
That makes sense. All right, a lot remains to be seen. That's clear. Was a very interesting deep dive into DATs. There's so much still to be learned, uncovered, so much to play out still. Um, and it was very interesting to see all the different nuances on that. Tim, I want to thank you for coming on and providing your insights on all of this.
Yeah, Stefano, Mariano, appreciate it.
For sure.
Thanks so much
Hey,
for having me.
if people want to learn more or maybe get in touch with you, what's the best way to do so?
Yeah, you can follow me on Twitter, TX0ZZ. And yeah, if you're team building space, feel free to drop me a DM. Happy to chat.
Awesome. Thank you for coming on, man. Also, thanks to everyone tuning in. Always a pleasure to have you with us. If you enjoyed this, you can access more insights in the following ways. For in depth reports, many of them publicly accessible, you can join our research platform. For protocol and market summaries and highlights, you can subscribe to our newsletter. And for daily news updates, you can join our Telegram channel. All the links in the bio. And of course, tune in next time. We're live I was going to say Thursday, but we're switching to Wednesdays, 10 a.m. Eastern Time on X and YouTube. The following 2 weeks, we won't be here as we will be off to the conferences. But after that, find us here back on Wednesdays. This was Market Cap, where funds and firms provide their insight on their activities, sector, and the markets at large to you, our audience of institutional investors and traders, as well as industry professionals. See you on the next Market Cap. Thanks, everyone.